is Griffin.
My tummy hurts. Pretty good, right back. Hey, what's going on, guys? Nick with Off the Chart Trading. I'll be doing tonight's video for January 25th, which is a Thursday. Actually, let's look at this. I was just looking at Microsoft. I just got back from dinner, and some of the guys in Slack were talking about the reversal, and that they, I guess their overall guidance and forecast was actually pretty bullish. So I'm assuming that was mentioned probably right around her, because quite the nice reversal and actually going higher than where it closed. $5, $6. So decent move. Definitely turned around the rest of the markets for sure. We can take a look. After hours here. What time is it? 7 o'clock. So futures have been open for about an hour now, and everything's up a decent amount. 8 points. It was up a little more earlier when I first looked. But NQ, nice little reversal from where it was. But I'm going to be honest, I mean, the future action overnight really doesn't mean much. You'll be up 50, 60 points, and you'll wake up and ES is down 60 or 70. So I'm not putting really too much weight into this price action as of right now, because obviously you guys know this market has been a little crazy, to say the least. So and I talked about it back in, I want to say probably November or December, somewhere along those lines, where I mentioned that there's really only two ways. Granted, I mean, if you trade, crypto or you do other stuff, then that's a completely different, thing. But my point is that the only way I see people being profitable through these rocky points is if you're scalping, day trading, very small swings. Basically, we're incredibly overbought, and then you short it, or we're incredibly oversold, which has kind of been the point recently, especially with the sell-off we've had. I mean, ES down 10% at the lows, NQ down 15%, Russell down 20%. I don't know the Dow at the top of my head, but that's actually been holding on fairly well considering. But we've had almost over 1,000-point move one way or the other lately, so pretty volatile markets. But you're either very, very, very short-term trading this, and I'll go over a trade that I took today, and it's just basically just sitting. I'm not a big fisher, Brett is, and I know some of the guys in the room fish, but I just, I guess if you close your eyes and just visualize it, if you're fishing, sometimes I'm assuming you could be sitting, wherever, whether it be the ocean or a pond or whatever, you could be sitting there for 3 hours, 4 hours before you catch a single, fish or a bite. And that's kind of, trading when it comes to it, is sometimes you'll just sit and just wait for the right setup. So I'll go over one of the setups that I took today and how I described it for the people that weren't in the room, because there was a lot of people that weren't in the room today that actually were able to capitalize on this index play. It was a SPY trade. But anyway, we'll take a look at that, and then we can take a look at the indexes as a whole, because honestly I haven't really looked at it in detail. I was gone out of the room. We went to Tennessee for a, I guess, small weekend trip, and I got back late Monday, yesterday night, so I haven't really looked at much other than obviously today, but I didn't really go into detail. I kind of just, what the screen you're looking at is basically what I kept an eye on all day. But we can rewind the clock. One thing I did notice, and sometimes it's hard for me to, obviously, I know what I'm looking at, and it makes sense to me, but it's hard to, I guess, articulate might be the right word to use. Mixing, I don't want to say technicals, but like a setup. And that a setup can be something as simple as, you're waiting for the 50 on a moving average, or a 20 or 100, or an EMA, the 8, the 21, 13, whatever the case may be, and you're going to buy here and sell there. As simple and robotic as that. Sometimes there's different points of reference, maybe use RSI, MACD, I don't personally use any of that stuff, but you get the ideas. You have one, almost like a checklist, and if you have 3, 4, 5 things, that might be part of your setup. But the other thing is too, market sentiment, and the not only the bigger picture is, oh no, doom and gloom, FUD, and it's the end of the world, but also in the short term, like the intraday action, the minute by minute action. And one thing I want to show, and why I took this trade, I didn't make a crazy amount, but to catch a dollar move on the SPY, as far as options are concerned, decent. I think I made $500 in what, 8 minutes, 9 minutes. I mean, I'm sure we can put that on a YouTube ad or something, but granted, if I held an extra hour or whatever, it could have made 3 times that. But I just look for a certain setup if I see one, and then go from there. So one thing I'll show is I noticed after the initial pukage in the morning, we ended up rebounding a little bit, and then one thing that caught my attention was the consolidation throughout the day. I'm just looking at the Dow right now, but you'll see that, I mean, a little weaker in the NQ. We all know that the NQ's been a little weaker, especially with even though the TNX has dropped a bit, the 10-year, but if interest rates are going up and the 10-year and yada yada, everyone already knows that. So definitely tech's been hit pretty hard. Russell a little harder, but specifically tech, because that's where all the big stuff is. But it's not, it's a little more defined here, but you'll also see the same setup where we didn't really have new lows. I mean, right there a little bit, but one thing that caught my attention was these buying wicks on the 15-minute. Like, you literally had, I think I have little terminology like this is a Wolverine pattern, and who was it? I think it was Ryan or Chris. I can't remember who in the room. I think it was Ryan. We come up with different patterns, so I called this one Fantastic Four. I didn't mention this in the room today, but it's the same concept where you have 4 candles and basically have wicks on the bottom end, or it could be on the top end too. I guess maybe the 4 horsemen if you flipped it. But it's basically showing a potential support area where buyers are stepping in each time. So when you have that for an hour, that's kind of like buyers are stepping in, where you go from that cascading, negative 1,000 ticks, negative 600 ticks, and it's just progressively getting beat down all day. Well, I mean, you can call it consolidation, whatever you want. It's just, the point is, we didn't really do much for almost an hour and a half. You know what I mean? Like, it was just sideways action. Same thing with the Russell. You can take a look at that, just basically sideways action. ES, the exact same thing, sideways action. Doesn't mean we don't go lower, but hear me out. This is where the other side of trading comes in hand. And once again, a Marvel reference. I like to sometimes step back, and it's not a matter of where I think something's going. It's, either A, who has more to lose, and what are other people looking at, and what are other people seeing? Because once you look at the markets that way, not only does it remove the ego completely from trading, but it also kind of gives you an edge and thinking how maybe other people will be thinking, or how they may be looking at the market. So if you went short this morning, and then, even the first, we'll say 10, 15, 20 minutes, 30 minutes, an hour, you're underwater or barely break even, especially if they expire like tomorrow, whatever the case may be, or this week, if you had puts or whatever the case may be. And you don't get any instant gratification, and especially after yesterday's massive rip your face off short covering rally, you get nervous. Like, if I was short and I saw consolidation when I'm thinking the market's going to be down another 2, 3, 4, 5%, and I'm not seeing that for almost an hour, 2 hours, whatever the case may be, I personally would be worried that the same thing from yesterday could happen. So you use that same mindset, and then you notice that there's a squeeze setting up and that the momentum is shifting higher. You notice a light blue on all of these. I mean, this one was a little late. I ended up doing the ES right when it went above the 0 line, and my buy was somewhere in here as far as looking at. I think I made a front runned it, but I saw the same buying wicks, the same kind of pattern. I mean, all of them are going to look very similar, but I noticed that we didn't really go lower for almost an hour. And if it was a downtrending day, you might have an hour, not even, maybe 30 minutes, two candles, 3 candles of sideways action. Then you get that flush. Sideways action, I call it stair stepping down. We didn't get that. It was literally just sideways. You could draw channels if you want and basically see that price is just, going back and forth, where once again, just the market we're in, you would assume that we would go lower. And when that doesn't happen, typically the opposite will. So I don't know, I can take a look. I'll show up the slack in a second, but I saw the squeeze momentum. I think it was probably right around here. Maybe it was 115, 130. Somewhere in here is when I decided to go long. And I wasn't in, I think it was just this one candle, or maybe this one. I think it was the follow-up, the 130 candle, when I decided to get out. And yeah, granted, there was follow-through, there was some short covering, but this is my point exactly. You don't know when this part's going to happen. And you literally go lower than where you got in. So if you were expecting that massive rip your face off rally again today, and you hold to the very end of the day, then you would have lost money. Those calls, I think I got in at like 350 or 450, I think. And they ended up going out at the end of the day at $3. So I would have lost money if I stayed in it. So I'm not one of those people that will, oh man, I'll say things like, I think we'll go higher. I think there'll be follow through and so forth. And there are some people in the room that will capitalize on that, and they will end up following through for longer than I am. But to me, the meat and potatoes, whatever the safer money, if you will, is once you get the direction right and you see confirmation all through here that price is going higher. The other thing that was a giveaway, I shouldn't say a giveaway, but a point of reference I was looking at, look how the VIX just, really started giving it up. Once again, almost like a waterfall. You have the consolidation, break lower, and then you have the cumulative tick going higher. And that's a little thing I do, and members have access to all this stuff, is I kind of came up with the cross as far as if the cumulative tick's going higher and the VIX is dropping. Once they cross, that's typically a buy sign. And cross-reference, like I said, around this time, 1:30 to, an hour later or 30 minutes later, if you followed that trend, I'm sure if you went long any of the indexes, you would have made money. Granted, then you can see sideways action and the VIX picked up towards the end of the day. But that was something I was paying attention to. The overall breadth ratios heading back up. The advanced declines from the low a day were slowly and then more accelerated here. So it was multiple points of reference. And I'm like, all right, cool. And the other thing is, too, it's harder to see now. But there was, tick distribution. We had a lot more closes above the zero line than below. And there was, it's hard with these wicks, but you can tell the bodies of the candles were slowly building up, higher after about, like what I said, about 1 o'clock or so, maybe 12:30. We were seeing more of the candles being above the zero line than below. So the overall trend distribution was higher. Everything was setting up to potentially go higher. And once again, using that mindset that if I'm short and I'm not seeing instant gratification and I'm short in the hole, I'm on the bottom of the day, any sign of strength after it's sitting sideways for an hour or two, I'm going to be the first one to get out. And that causes that, firecracker, as Dalton would say, that effect where it's just boom, 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 just straight up. And that's exactly what happened. Now, it didn't follow through like yesterday completely until the end of the day, but you had an hour to clearly make money in any of the indexes. I think Brett traded the IWM through here. So you can pick your vehicle of choice. Some will do better than others. But ultimately, when it comes to these markets, for me personally, when I want to go short, I don't typically short specific stocks. I like to short the indexes. In volatile markets, I like to do the same thing. I like to trade the indexes because, you might say Tesla, great, and then Tesla gets a recall and Tesla drops $40, but the markets are ripping. Well, then you just kind of shot yourself in the foot. And obviously, that's not something you can plan for. And granted, sometimes you can flip that and say, oh, cool, we caught $2 on the SPY, but, the Tesla's up $50. That's going to happen too. But I feel in these markets, you don't need to worry about that extra oomph, like a fast-moving momentum-based stock, because the indexes are going to do it for you because of this type of volatility. So that was basically the idea of the trade. And for you guys that aren't members, just to show kind of how I try to, articulate that. Let me pull this up so you guys can see. We use Slack for alerts and so forth, but yeah, I was right. It was right around. So the cross, and that's what's the beauty is. I love, not that I watch really many YouTubers or other people that trade on the internet, but I always find it funny, like, oh, this is where I got in, like this arrow, or oh, I got in here and got out right there. But anybody can look at a chart after. It's all hindsight, you know what I mean? So this is what's important. Like I literally at 126, and granted, I was in it for maybe about a minute or so before I posted, so it's about 125. So cross-referencing that, it was right at the end of this candle going into this one, in between this, and that's why I said I think I was waiting for that confirmation. So once we got that green candle, basically breaking all of these EMAs and that squeeze moving higher was my buy alert. And this is exactly what I told people. 15-minute chart is looking pretty bullish. The ES on the ES and the VIX is dropping, as I'm showing you guys right here, and the cumulative tick is moving higher. So those are a few of the points without going into crazy amount of detail why I was looking to potentially go long. I ended up doing a 5 lot. I always defaulted to 1 so people don't try to copy and paste. But I got in at 3:45, and I was literally out a little less than 10 minutes because, like I said, I was in I think at 125 or 124, and like I said, by the time I actually type it up and copy and paste and stuff, it does take about a minute to share that idea to people that might not be in the room. But we'll just say 10 minutes later, those calls were already up 30%, and I caught a dollar move, so I put a sell in at 4.45 just to catch a dollar move. I had a 5 lot, so for simple math for you guys that maybe don't do options, I made $500 in 10 minutes. Not a crazy amount of money, but on a day like this where it's up and down, plus 1,000 ticks, negative 1,000, I'm happy just making any type of money. And to be, scrolling up here, I mean, I'm on vacation, and I'm still trading. The spy was where my wife and kids. We got back to the car, and I'm sitting in the parking lot for 4 or 5 minutes. I talked to Ed, aka Batman. I'm thinking like, it feels like there's going to be a massive short squeeze. I wasn't going to be able to monitor it because obviously I'm going to be on the road, and the last thing I need is to be on the highway going 80 miles an hour or whatever and trying to manage a trade. So I just put a sell in at 4. And there you go, hit at 4. Yeah, it's like 3:30, right before we got back on the road. So I hit at 4. So I made like $1,250, you know, while on vacation. And it was basically sharing my ideas. It was right after the open. Granted, this trade was underwater. Not right away. It was up a little bit. I think it was up 100, $200 because we were just so oversold that I assumed we would see some type of short covering. I jumped the gun a bit, but then I added to it. I added and got my average down. I don't remember the average. It was in the low, I think like 230 or something. 225. I can't remember what it was, but basically my point is this trade was just based off of everybody's short. The market's dropped. It doesn't matter what, my RSI, my MACD, my ATRs, my Bollinger Bands, whatever, form of overbought or oversold, even though there's not a true form of that, it's safe to say that everything, and granted, in these types of markets, they can stay overbought and they can stay oversold long, for weeks. It is possible, but highly unlikely, especially with that type of, move down. Shorts have to cover just to and that causes buying. Algos come in, and that's when you get a, what was it, 130 point reversal on the ES, which is crazy. But like I said, I'm out on vacation. I just have my cell phone, and having that market, I call it market sense of what's going on in the markets, gave me the ability at 9:30 in the 5. We were 9:35 in the morning. We walk into this place in Knoxville to eat breakfast. We leave. I see that it's down. I'm like, all right, cool. I add to it. And then, 2 o'clock, I think, is right around when I checked my phone again. I saw that I was green. Yeah, I was in the Smoky Mountains. I had no service for like an hour and a half. I come out and, I'm basically green. We go out to eat lunch, and then we're getting back on the road, and that's around the time. It was like 3:30. I was looking at it. I put a sell in at 4. It got hit. So this trade literally covered, and it wasn't that expensive a trip, but my vacation was covered from this trade idea, and it was solely based off of market sentiment and everybody leaning, oh, this is the end of the world, this is it. I'm not saying we can't go lower, but in the short term, you will have these types of rallies. So, even on vacation, I'm trying to update people and give exactly what I'm doing. And then obviously today was another follow through. And granted, people could have done a 20 lot and made, thousands of dollars. But, the way I look at it, $1,250, $500. I did the exact same trade idea on Friday, but it was a short trade. Made another $500-$600. That one I was actually right getting on the road, so I just wanted to lock it in because nothing's worse than, wow, this trade's working amazing, and then you check it 2 hours later and it's not, and it expires the same day or whatever the case may be. So I'll either put a stop in or just get out and take the quick money. So 2 of the days that the markets were open, I was on vacation. I mean, between making $500-$600 and $1,200, rounding up, it's almost $2,000, and then another $500 today. So when you look at it like that, even when my other longs are getting hit or sideways or whatever, this offsets a lot of that. But anyway, I also followed up with what I was looking at, and you can actually see, what exactly I was looking at. I don't know if it's going to look like standard definition or whatever. But my point is, I went over, and this is going back to that time, obviously, because the chart's going to look a little different. Yeah, this is easier to see now since they're not populated. Tick distribution was higher, more closes above it. That cross I was talking about, as far as them going this was early on, but they were going the opposite way, where cumulative tick is taking off vertically and then the VIX is dropping. That's a recipe of higher prices. Does that mean it's going to happen? No. But when you see a setup and you have 3 or 4 or 5 points of reference, and everything's lining up, all the planets are lining up, you take the trade. Doesn't mean it's going to work. That's where risk management, position size, and all that stuff comes in. But when you see something like this, you got to be able to take it. And I took it, and, if I had a daily goal, it probably would be 500. I made it in 10 minutes. And I got to just chill in the room the rest of the day. Like, as simple as that. And the beauty part is, other people, were able to do well too. Connor was able to take it, make quick money. Mike was joking around saying he was in a strip club. Then he verified that he was testing with a new card. But my point is, that's what's the beauty of it, is you can literally pull out your phone, and not every trade's going to work. But in markets like this, you'll notice that it's not buying calls in your favorite stock 2 weeks out and, oh look, it shot up $5. Here's the money. Like, that's typically my bread and butter, and the way I trade is directionally. I'm a directional trader. I think something's either going to go up or down, and if I think it's not going to do anything, I won't take the trade. Oh, I like Apple. I think they're going to beat on earnings. Let's go long. Whatever the case may be, that is ultimately how I trade. That's not this market. And that's the thing I think where a lot of people end up getting killed is they're used to buy the dip, buy the dip, buy the dip, and the dip's a day or two long. God forbid the dip's 3 days long or 4 days long. You got people blowing their accounts yesterday. And we didn't really pull, I mean, what's 500 points, on the ES, or 600, whatever it was, if that, like, it's what's 1,500, 2,000 points on the NQ when it's at 15, 16. Like, that's not that big of a move in the grand scheme of things. It could get a lot uglier. Granted, I don't think it will. I think from a broad perspective, the economy, everything else is doing well. I don't think there'll be a recession unless the Fed really forces interest rates down everyone's throat, and then that could potentially cause one. But with unemployment the way it is, supply chain, everything going back to work, I just don't see it happening. But most people don't ever see it happening, so who knows? But it would be interesting if that ever happened. But being, as a trader, prepared for that. Every scenario you run by, and obviously hope for the best, but plan for the worst, and that kind of keeps you in the game. But we could take a look. I just wanted to show that breakdown as far as the trade. And like I said, sometimes you'll have that right setup, everything looks amazing, and then you get negative 1,000 ticks, and we break lower. That obviously can happen. But more times than not, if you follow a plan, define your risk, position size accordingly, have a plan. I even mentioned day trade. Oh man, we're really going higher. I'm up 1,000, I'm up 1,500. And if I held, tomorrow, who knows? Maybe the ES is going to open. Now, I was just talking about how the futures all opened up great. Now look, they're all red again. So who knows where we're going to open? We could open down another 50, 60 points, and those calls are worthless. So that's why, it's discipline. It's taking the money, waiting for the right setup, and going that route. Real quick, we can take a look at, I'm still looking at Microsoft, pull back a little bit. ES, just to see where we're at. This is a decent weekly candle, but we are below the 34. I talked about this last week. I think at the time it was a yellow candle. Red, which is basically below the 34. And the last time that happened was, going into February and the March. And we all know how that happened. March of obviously COVID lows. I don't think it's going to be as aggressive as that, but we'll have to see. This is a decent candle. And the dailies look actually really good. They looked better earlier on, but you had two candles that looked almost identical. Now, this ended up going out towards the lows, not the lows, but a decent pullback, but both of them at the time looked really amazing, for potential reversal candles. But then here you are giving back almost half that move and then opening up in between that. So we're still in a downtrend. Everything is still, lower ultimately. I think it's all going to be dependent on the Fed. I've been saying that for a year now. Like, I don't honestly think the market really cares about COVID. I don't think it has since, 2020. I think it's all what the Fed is going to do. And this is a perfect example of that. So NQ obviously looking a lot worse, straight down. We'll just have to keep an eye on it. Like I said, it makes sense for it to get hit. If you guys remember, was it Thursday or Tuesday's video? I was talking about a particular level, and it was the 21 on the monthly. And, that was a pretty big drop. And then look where we're at now. So what's another, 700-800 points for us to drop? I think us at least hitting the 21 on the NQ makes sense. Maybe we open up lower tomorrow, right before Powell and friends talk, or, I don't know if he speaks tomorrow. If he does, it'll probably be at 2:30 Eastern time. I'm not sure if it's just a meeting and then they share the notes the next day, or if he's actually actively speaking. Fingers crossed he is. I honestly don't know off the top of my head, because if he's very clear that it's only going to be a 0.25 rate hike and they're still not 100% on the date, then that I think will be taken bullish, and that's when you could end up at least coming back up to the 21, and then obviously go from there to see how the market takes it. But that would be a potential play where you could literally sit in it for, I don't know, 2-3 days to see some follow through, as long as they don't say anything hawkish and they're kind of, the market I think is this taper tantrum, whatever word you want to use. They're saying like this is just them, and I quotations, them, they, whatever, pushing the market down to kind of make a point, Because if you guys are all worried about the economy, and regardless of what people say, yeah, if people are losing money, I haven't seen the headlines, but I guarantee it's trillions have been erased in the markets. Well, obviously that is going to affect the economy. Maybe that people aren't going to buy that house now, and that could affect the real estate market. And I can't retire now because my 401 just dropped 12%. Whatever the case may be. So regardless of what they want to think, this does directly affect the economy. So they obviously don't want it all the way down here. So we'll just have to see what Powell and friends have in store. I don't think they're going to kill the market, but we'll see. I mean, obviously we talked about this squeeze for months. It is officially fired short. Sometimes it fires and doesn't really do too much, but we'll have to see how that goes. Russell looking similar to the NQ, kind of hit the worst, and then the best looking one has been the Dow, and that's mainly because of the bigger companies, the ones that are older legacy companies that make money, and there's not too much to worry about. I mean, this squeeze is still looking intact. If we all end up getting out of this relatively soon, this squeeze that's been in since August of last year might end up firing long. And then you could either play the diamonds or find specific stocks in the Dow, like Apple and so forth, to play those long. I wouldn't shoot for all-time highs, but I think it's safe to get back up to the 50, 34, 21, somewhere in here where the EMAs and the standard and moving averages are overlapping. You don't want to give an exact price, but baby steps. I like to say in the room, bus stops. The first one would be the 8. Oh, cool, we're breaking above the 8. Oh, what's the next one? The 20 or the 200. Oh, great, the Dow's above the 200 now. And then, that's when you get up to here, that's probably when it's, on its last leg. So, anyway, just some ideas. And like I said, I wanted to go over that trade. I didn't honestly look at market profile today. I didn't really find it, I don't think when it's completely extended one way or the other that it's very helpful. So I honestly didn't even start it today, so I'm not going to cross-reference that at all. Just basically wanted to go over that idea, kind of some maybe looking at a bigger picture. And I don't think actually, just, my scatterbrain, I don't even think I even finished my thought with the whole X-Men thing. And that was Professor X and Cerebral basically able to see everyone's, thoughts and stuff. And I like to, sometimes think like that. Like, it's not a matter of what I'm personally doing, but what is everybody else looking at and what is everyone else doing? And that has been an edge I've acquired over the years. And that might be your golden nugget for the day, is sometimes to just step back and not worry about what you see and what you think, but what does everybody else, because everything on the screen right now, the plus sign, the minus sign, this and that, is emotion. And you just need to be aware of it. You can completely disagree that there's no reason we should go lower, and you can technically be long the market, but in the meantime, at least short it or look for reversals and so forth. But anyway, as always, hopefully it's been helpful. You guys are free to check us out at offthetcharttrading.com if you ever want to, join and see if this is something that might help you out. If not, it's, especially during these times, it's great to be a part of a community that genuinely cares. And even when it's a bad day, we can at least talk about living under the bridge together. So anyway, on that, you guys have a great night, and I'll catch you at the next one.